All right, looks like we are live now. Welcome back to Roxham TV and also welcome back to Gem Crypto, whichever platform you're watching on. Welcome. So I hope you guys are doing well wherever you are, whatever countries you guys are based in. Of course, I'm coming to you live Monday to Friday, 4 a.m. Eastern time. So, well, today when I woke up and I opened my eyes, of course, the first thing I check is Bitcoin's price because we are Bitcoin folks, so we are crypto folks. So that's the first thing I check. And then there is so much fun in the Bitcoin market. Like Bitcoin dropped to 108. So that caused so much panic. People again is flooding on Twitter saying maybe we have already seen the cycle top. So of course, this live stream, we're going to dive into the chart. We're going to look at like basically what triggered this major dump in the Bitcoin's price. Why is this happening? And also we're going to look at some of the news kind of related to Bitcoin mining, because I do see Bitcoin mining and AI coming together, and they have huge synergy, and there's a lot of stuff that they can collab on and integrate basically and complement each other and brings the strength in each other. So we're going to look into that. So welcome. If I haven't said happy weekend for you guys, it's Friday. So I hope you guys have something fun in your plan, what you guys going to do type out in the live chat because I'm reading them even though I'm doing live stream. So yeah, do share your plans. Yesterday, I just a quick update on my side because yesterday after the live stream, I went onto a Bitcoin event and there was this thing. So let me just do a quick sharing. We're going to look into the chart in a bit, don't worry. But since we're talking about weekend, so I saw this thing during the Bitcoin event. So this is basically a Bitcoin ATM. So what this guy, so by the way, Jeremy is a great guy, he's a Bitcoin educator. So he was carrying this Bitcoin ATM in his backpack and he was showcasing how to basically insert some HKT, local currency, Hong Kong currency, into this like ATM machine. So it's like everything settled in real time once he inserted this banknote into the ATM machine. You get, so he's inserting $10 HK, and then you're gonna get the $10 worth of BTC instantly to his wallet. So that's the Lightning network that he's using. So I just find it really cool. So I share that video on Twitter. That's the quickest way for me to reach out to my community. So make sure, give me a follow there. Make sure you type gem_crypto_io. Otherwise, you'll get the hacked account. So that's the update on my side. Let's now also hop onto the Bitcoin chart because Bitcoin is doing what it does. And as we know, like September tends to be a like very slow month, like consolidation period. And 8 out of 12 months in September, we actually end up a dip. So maybe we are seeing that play out now that we are towards the end of September and entering October. So if you catch my live stream yesterday, you will know that, okay, first of all, days ago, I have called the local bottom of 111K. So if you guys, okay, Bam Crypto is here. So if you guys watch the live stream, like, because Bam Crypto have been watching my live stream every single day, really appreciate your support. But I actually call 111K as the local bottom. So what I talk about in yesterday live stream, and by the way, is playing out really well. So I love how TA works sometimes. It just like give you a reference, and I am a believer that narratives follow price, and the charts are forward-looking, like is a leading indicator. If you want to know where the markets are heading to, just look at the chart. So this is why I always start my show with a little bit of TA, because I don't know, for some magic, for TA, like the price would reflect first and then the narratives will follow. So basically, if you missed yesterday live stream, I was saying that 111K, so 111,000. I've been calling that bottom for days even before that. So we had the local bottom, but what happened yesterday, what I saw yesterday was that, okay, we have 111K. However, what I witnessed is that we consistently testing the level of support. So the more we stay on the support line, the weaker the support is going to get. So I said that on the hourly chart of Bitcoin yesterday, and look what happened, like boom, we crashed down to 108K. So that's on the hourly chart of Bitcoin. Of course, people are saying, okay, what's going on? Why is this happening? So if you zoom out on the hourly chart, what I'm seeing here, like the major support line is at 107K. Like why we have this number is, of course, like the prior low. This is back in August, so late August, so early September. So at the, like, again, like we are towards the end. So are we gonna go back to the previous low, which is the end of August, so the end of month? This is like 107 is another level we have to watch. That is the hourly chart. So if we lose that on the hourly chart, of course, like if we lose that 107, there is again more room for correction. But this is just what the short term, again, we are on the hourly. So this is based on the short term perspective. Let's also move on to the daily chart so we can have more perspectives, like more longer term when it comes to our analysis. So again, like 107, if you go to the hourly, is also the so we tested here back in, again, late August. We also is like prior high back in July, and it's also a prior high, like a prior all-time high, all the way back to January 2025. So that's why, once again, both the hourly and the daily is saying that 107 is another level we have to watch very closely. So if we lose that, again, more room to the downside. So on the daily, I kind of now want to pull out the hour side. So our side right now is sitting at 37, but in terms of the hour side, there is a level that I find it really interesting. So around 34.5, like this is I would say a reset level. So the reason why the 34, by the way, we haven't actually reached 34 in the hour side, so 34.5, somewhere around that. So that's the level I'm watching in our side. So whenever we touch this level, there's like a reset. So that's what happened in April. So April here, we saw the hour side. Okay, let me get the brush. So we saw the hour side touching this level, and boom, we got like a Bitcoin rally here. So that's just like one time, like, and then we have like, okay, let me zoom to August. So sometimes, of course, there's a fake out, or we even drop below. We went to as low as 26 for the RSI. So RSI is a lagging indicator. Why we have to look at this is like it gives some time for Bitcoin to reset and go to higher places. So now, like, okay, back in August 2024, we have reset, and then we pump a little bit, but that was more like a fake out. And then we actually retested this level again. And then after we retested 34.5 in the RSI, look what happened. Another major rally for Bitcoin. So that's why if things played out again for the month end of September. So maybe there is more room for the downside. Maybe we're gonna reach the prior low, so 107. If we lose that, 101 is another level that is very important. Like 101, or okay, let's drag down a little bit, like 100, like somewhere around that. So 100. The reason why we have 100 is that we have like so much data around 100K. Like basically we have been building around 100K for 2 months. That is back in December last year all the way to February. So there's so much price history here. So again, this is what the daily is suggesting. Maybe we have to eye the RSI very closely and we have to wait for the reset. That's on the daily. Also, now hop onto the weekly to look at things in a longer perspective. So again, for the weekly, let me remove that. Okay, do remember the 100K that we drew, because that's the support that we saw on the daily. Right now, as you know, if you have been watching my channel for quite some time, you know there are two indicators I absolutely love. So the first one is the bull market support band, and the second one is a 50-week moving average. So again, the 50-week moving average is approaching, like right now it's 99K, approaching 100K. So of course, I don't think it's like a huge draw. We're gonna go to crash down to the 50-week. But what I'm saying is that the 50-week is slowly catching up. So by the time we get closer, maybe it's gonna be 100K or somewhere around that, because that is also suggested in the daily candles as well. So again, let's see if Bitcoin's going to go to this, so 50-week moving average, and then we'll take it from there. Because one thing so important about Bitcoin is that, well, September tends to be a slow month. Like some people, like some of the Twitter influencer will say, okay, wake me up after September ends. Looks like it's playing out rather well again. Like history doesn't repeat very often, right? And in this case, Bitcoin is proving to be intact with the cycle. Yet again, people like to say this time is different. Okay, that's for the BTC chart. Let's also hop onto the S&P. Like I covered the S&P like last week. The reason why I talk about S&P is because like Bitcoin and the stock market they are very highly correlated. Of course, there's divergence. Like sometimes Bitcoin does deviate from the general stock market, but the general rule of thumb is that Bitcoin is following the stock market. And the reason why I cover the S&P, which I don't always cover the stock market, but the reason why I pulled that out last week is that we are seeing S&P on a major rally, basically all the way since April this year. So it's a 37% pump in a matter of 173 days. While Bitcoin, we are experiencing this like that's the deviation. So Bitcoin is on a downtrend, while if you go to the S&P, it's just like up only. So this up only actually is a little bit concerning, because we need to have a pullback. And this looks just like another healthy pullback. There is no one staircase up to the heaven, so the S&P have to pull back. But the thing is, when the S&P pull back, it's going to drag down the market, so especially crypto market. And if S&P is dropping, there's a chance, like a high chance that Bitcoin will dump. And that is what we saw here as well. So let me zoom closer. So the S&P was correcting. We are seeing the downtrend here, and so is Bitcoin. Like Bitcoin is on a downtrend. So S&P correct, the Bitcoin market will correct as well. But like the general rule of thumb, like if you zoom out, okay, let's hop onto the weekly chart. So let's go to Bitcoin weekly candles as well, you will see that they're actually very highly correlated. So okay, let me zoom out on BTC as well. Maybe that's a little bit too much. Okay, so maybe starting from here, the crash, you are seeing, okay, the S&P is crashing, so is Bitcoin, and then the S&P is on a major rally, so as Bitcoin. And then here we have like a top, so Bitcoin top first, and then the S&P follow, because Bitcoin is more like a leading indicator for the stock market. So, and then we have the 2022 rate hike. So S&P was dropping. We reached like a bottom, so cycle bottom. So as Bitcoin, so as Bitcoin reached the cycle bottom, and then we are on a major rally, and then we crash. So does Bitcoin. And then right now S&P is on a rally again, but Bitcoin diverged a little bit. We saw like Bitcoin was correcting while S&P was still on a rally. But looks like after a while, maybe Bitcoin is correlated with S&P again. So that's another reason why we are seeing a major crash. So why Bitcoin is down to 108. And by the way, I think it's healthy because like we have been trading like a divergence between the two assets a little bit. So it makes sense for Bitcoin, and also S&P is just like, it's pumping nonstop. It has to pull back. Otherwise it's weird. Okay. A healthy market doesn't work like that. All right. So that's for the S&P. Today, I kind of want to look at the the altcoins market a little bit as well. So the reason why, okay, there's a conversation I had yesterday with my friends, and they are in crypto. So we're just like exchanging information, and he was just sharing his perspective. One thing he mentioned, and I kind of like got me thinking. So he is a believer of the 4-year cycle for Bitcoin. So he thinks that we're going to see the cycle top in Q4 this year. He was a little bit bearish because he mentioned that October is going to be the top. So he's selling, especially his altcoins. So I threw that question to him, like, does he think the alt season is still relevant? Do you think we're going to see alt season this cycle? So his response was like, okay, October, we're going to see a Bitcoin new all-time high. And then maybe we're going to move on to Ethereum, breaking new all-time high, and then Solana, and then Sui, and then that's it, the entire market crash. And I was like, okay, what about the rest of the altcoins? Because there are a million coins out there. So what about those? He was extremely bearish for altcoins. And I mean, it does make sense because me and him, we have been around in crypto for years. So we have seen cycles, and this cycle, it does look really weird. Like it doesn't align with the previous alt season that our understanding have. So yeah, so he was saying that most of the altcoins gonna bleed. So today in my TA, I kind of want to add the crypto market cap. So here's the total crypto market cap, excluding BTC and ETH. So we are on the weekly. So we are seeing a correction. So we reached 1.17 trillion, but right now we are down like 10%. So that's quite huge. Just like billions of dollars just evaporated in a matter of days. Yeah, so what I'm seeing here is that there's still room for altcoins to correct. Altcoins are bleeding, and the next critical level, okay, I have $784 billion, but like actually I'm eyeing 900 billion. So in other words, I do think altcoins gonna drop or maybe even reach this support, like 900 billion. The reason why I will say this is that, okay, let me pull up the RSI again. So we are seeing this like bearish divergence in the RSI. So we are seeing the altcoins market rising. That is from December 2024 till right now, September 2024. But we are also seeing a bearish divergence forming on the RSI. So that's not good. That means altcoins are still bleeding. And in terms of the crypto money, definitely going to flow back into Bitcoin. So I do think the Bitcoin dominance is going to rise, especially in the coming weeks. So yeah, maybe my friends were right. Like maybe the alt season that we understood back in 2021 is no longer intact. But we'll see. So that's for the TA. And as for why we are seeing a huge dump, actually, just over the 24 hours period, we saw another massive liquidation took place. So we are correcting a little bit because this morning I checked, it was over $1 billion. So actually $1.7 billion being liquidated in a lot of position, and most of that are on Hyperliquid, Binance, and Bybit. Like, of course, because Bybit and Hyperliquid is very known for pooling leverage. So that's why a lot of positions got liquidated on these platforms. So $1.7 billion being liquidated. I believe just like days ago, I covered these massive liquidation. So in other words, in a month of September, we got 2 massive liquidations being took place. Well, that's September, I guess, and Bitcoin just doing what it does and following the exact pattern of its Bitcoin history. So that's the liquidation, and I personally, I don't use leverage that much. I don't do a lot of contract trading. Of course, I've done it before and I've experienced liquidation, and that feeling sucks. Like one day opening your exchange and saw your balance went to 0, and I've been through that. So like during volatile time, especially in the month of September, we know that it's going to be consolidation period. We know that it's going to be like a lot of chops around, whether it's going up or down, basically trading within that range, within that rectangle I always draw. So yeah, so my advice is that be cautious. And when it comes to contract trading, actually more than 90% of people are losing money. So if you know what you're doing, then a lot of money could be made. There's a lot of potential, but it's extremely risky. So just know your risk appetite when it comes to pooling contracts or leverage trading. And this is another reason we are seeing a massive sell-off in the Bitcoin market. And the third reason is that Bitcoin spot ETF. So we are seeing an outflow. We're talking about multi-millions of dollars flowing out of the Bitcoin market. So mostly it's just, okay, there's a slowdown in the ETF inflow. Mostly it's just institutions de-risking. And I mean, it makes sense because institutions, okay, they like to de-risk a little bit. Maybe they saw there's like a tension in some areas, some regions around the world, or the trade war, yada yada yada. But it just makes sense. Nothing is too concerning. But because of institutions de-risking, it also lead to the crypto market drop to like $3.9 trillion. So yeah, institutions, when they move the pinky, like crypto would feel the pain. All right, so that's for the market analysis. Let's move on to some of the news. And one biggest news, and also a reason why we saw a massive sell-off in not only Bitcoin, but also in the S&P 500. All right, so here comes the macro news. We have a big surprise out of Washington today. So the US economy grew much faster than we thought. So the Bureau of Economic Analysis just revised Q2 GDP growth up to 3.8%. this is actually the strongest since 2023. So the prior month it was, before the revision, it was 3.3%. And right now there's like a 0.5 uptick revision. So this is extremely good, but let's break it down. Why this revision matters and what is actually driving GDP, and more importantly, how would this impact the Bitcoin market, right? So how did this happen? So basically, why the sudden revision? Is that manipulation? Is it normal? Like, we do get revisions like this. And so the GDP usually goes through like 3 estimates. So the first one is the advanced one, like the 1 month after quarter ends. The second one is 2 months after quarter end. And then we have the final one, which is 3 months after the quarter end. So the 0.5% upward, it feels really dramatic because, but like revisions between 0.3 and 0.5% is actually quite common. So it's not like unprecedented. There are key drivers. What is driving up the GDP? So first of all is the consumer spending is actually going up. So the figures were revised upward due to an increase in consumer spending, indicating the economy is staying resilient in the face of headwinds from tariffs. The revised figures suggest the economy stay resilient amid Donald Trump's trade war, with which economists say have slowed down hiring and stock inflation, at least temporarily. All right, so consumer spending revised up to 2.5%. There's like a 2.5% growth. And imports also fell more than expected because of the tariffs. So no surprise then. But this got me interested. Like 0.5% upward, like another miscalculation, so-called miscalculation from the government. So how is GDP being calculated? So here's the formula for GDP. So GDP equal consumer spending plus investment and government spending and net exports. So here's how we calculate the basically 3.8% growth. All right, so what these numbers mean is that, okay, for consumer spending, we saw a rose, so as most of these components. So why is consumer spending more despite we have a extremely weak market? So here we are on the non-farm payrolls, and we are seeing like each month. So starting from May, we are only adding less than 100,000 jobs per month. And usually less than 100,000 jobs, that's concerning. That means, okay, the economy is slowing down. If the economy is slow, then people don't want to spend as much. So why the hell is the GDP looking so strong this quarter? Well, okay, unemployment rate is ticking up, is at 4.3%, which is the highest since 2021, yet consumer spending surged 2.5%. Okay, I dove deeper into data. The key reasons is actually, okay, the wealthier households drove like 60% of the spending. So basically the rich is getting richer. The reason why the rich is getting richer is because a lot of rich people, they invested into the stock market. And look at this chart. It doesn't take a genius to know that the stock market is on a major bull run, a major rally. So rich people made a lot of money from investing stocks, and also like some sector, they have like a wage growth because of some skilled jobs or trying to catch up with the inflation. And another reason is that there's a lower energy prices. So oil prices has been in control. So that is why. So what I'm saying here, the majority of consumer spending comes from wealthy people. This is what we call a K-shaped economy, K-shaped recovery by economists. So the top 40 they are thriving, while the bottom 40, they are feeling the pressure. So that's why the higher GDP. But like, why are we looking at GDP? And you could be asking the question, okay, Jemmy, like a better GDP, that must be good because it showcased the economy is still really strong. Okay, a strong economy means bad for crypto. Bear with me. The reason why I'll say this, of course, it links to the rate cuts issue. So strong GDP means we're going to have higher yields, higher bond yields. Also, we're going to have stronger dollar, and that would be like a bad news for risk on assets like BTC. So straight off the bat, like BTC fell. Like, of course, some of the people on Twitter, they're flooding even more. So BTC reacted fast with the massive liquidations took place. And right now, when it comes to the rate cuts, the expectation dropped a little because last time I checked, like days before, I think I checked last week. So last week I checked, people were still pricing in. So more than 90% of people are expecting a 25 basis point cut. Right now, because of the GDP, it dropped a little. So it's sitting at 87%. So a small difference, but noticeable. All right, so that's for October, and so is December. So December, people, so 61, let's call 62. So 62% of people are predicting that we'll get another 25 basis point cut. So this number, of course, is changing. So people are seeing that, okay, because of the GDP, there's less room for the Fed to cut rates. So that's the effect from the GDP. Of course, like why this matters for Bitcoin in September. We are seeing the red September trend looks like it's playing out. We are basically battling whether we're going to close September with a positive number or a negative number. And then the GDP revision is adding more pressure to the Bitcoin market. So, but again, there's still catalysts ahead, like the inflation number looks like is taming because we look at the PPI, which is a leading indicator, is coming down. So that's good. So that signals, that basically tell the Fed, okay, inflation is coming down. Please cut some rates. But what the GDP is telling us is that the US economy is stronger than expected. That's good news for Main Street, but bad news for Bitcoin short term. I can't stress this enough, is bad news for Bitcoin short term only. So strong GDP means fewer cuts because it doesn't give much reason for the Fed to cut rates when gold is at all-time high, stock market is an all-time high. Bitcoin, like it touched all-time high, even in a high rate environment. So that's something. So for crypto traders, it's just a reminder, like sometimes good economic data, it could be bad for your Bitcoin backs, basically. All right, so that's for the macro analysis. Let's move on to some AI news. I do want to add some AI news in my daily live stream now because I do see huge integration. So what's happening here is that Tether, if you didn't know already, is the world's largest stablecoin, USDT. So they are raising $20 billion at a $500 billion valuation. That puts it on the same level as giants like OpenAI and SpaceX. But like this isn't just stablecoins anymore. Tether wants to diverse and get into AI or even energy and infrastructure. So let's break it down, what's going on, why it matters, and what this means for crypto. So what is Tether planning for? Why they are already, first of all, printing so much money. They earn so much revenue just from the stablecoins business. Why they're getting the AI. So I would say it actually makes sense. They have been planning for AI for quite some time. They are building like open source AI that runs on blockchain with tokenized incentives for people who contribute data or compute. So think AI trading bots or fraud detection. And then they're also doing like P2P with blockchain integration. They are leveraging Hole Punch, which is the peer-to-peer platform. Like if you haven't heard of Hole Punch, don't worry, we're going to get into that in a bit. So what they're doing is that they're building the AI system that don't rely on big tech servers. For example, like AI search or decentralized data sharing. So that is just like some of the things that they're building. Like is a like big part of this push comes from Tether Data. Is a subsidiary that could roll out AI enhanced wallets and Oracle services as soon as 2026. So why is Tether getting into something beyond stablecoins? USDT is making so much profit. Like in 2024 alone, they made $10 billion. But again, it depends on the interest of the US treasuries, because Tether is making so much money from just holding US bonds because there's a yield, right? And we are still technically speaking in a high rate environment. But as we know, rate cuts are coming, so the profits might shrink. This is one driver, like one key driver why Tether might want to diverse, and they don't just want to be in the stablecoin business. The second reason is regulatory risk. So there are laws in Europe, so the MiCA law, and also some US scrutiny. Like US, they have the Genius Act. While the Genius Act is generally favorable for stablecoins, for crypto, like when it comes to the backing of Tether, they have other assets, like they have Bitcoin. They actually have gold, like Tether holds gold as well. But if they want to comply with the Genius Act in America, they have to hold cash equivalents. They have to hold majority in like US Treasury. So they kind of want to expand beyond just stablecoin. And a third reason that I'm seeing is that AI fits perfectly in crypto. Like both industry, they need each other to focus on tokenized incentives, and Tether just see the synergy. So hence Tether is getting in. And another detail that a lot of people don't know. So this guy, so Howard Lutnick, he is the CEO of the investment bank, Cantor Fitzgerald. So he's the CEO, and he's also the Tether's banking partners. Yet he has strong ties in AI and tech deals. So those connections kind of like deepen the tie for Tether to get into AI. And I do think that Tether gonna be successful. Maybe it's not a full pivot. It's more like an experiment, whether it's gonna overtake OpenAI someday. Tether do have strong strength, because there's huge cash flow, is basically has been printing money, and Tether has invested in over 100 companies. So like it shows execution experience. But of course, they at the end of the day, they're competing with OpenAI, they're competing with Anthropic. So the AI competition is really keen. I would say like there's like a 60 to 70% that Tether will make it in the AI industry. But like even capturing 5% of that projected $187 billion AI market by, let's say 2030, like it could justify the $500 billion valuation that they're trying to reach here. And for Tether past investment, this is just like public information. So the CEO was very transparent to some of the AI investment they made. So one of that is being okay, sorry, let me just close this. All right. One of that is BlackRock Neurotech. So BlackRock Neurotech was founded in 2008 by at the University of Utah. The company quickly became a technology leader in neuroscience and basically like medical stuff. Tether invested into this like brain-computer interface firm using AI for paralysis treatment. So the early trials look very promising, huge upside if they hit the market by 2027. So that's BlackRock. And then we have Hole Punch. Like we touch upon Hole Punch a little bit, but like here's the deeper background about this company. So Hole Punch is a platform that allows the creation of applications without any servers, supported by Tether and Hypercore, which is a company that develops P2P scalable and cryptographically secure distributed systems. Its first product is Keat. So Tether invested $100 million into the decentralized P2P platforms with AI features. So real-time translation, privacy-fast messaging. Tether and Bitfinex provide funding support for Hole Punch. So the CEO previously disclosed a preview of AI applications being developed by Tether Data, including the AI translation, AI voice assistance, and AI Bitcoin wallet assistant. So that's another one. And then the third one that I think is a really good investment. So Northern Data Group. So Northern Data Group is a provider of AI and high-performance computing services with businesses including the AI cloud and ardent data centers. So the group's expected full year revenue for 2025 is between 240 million euros and 320 million euros, with an adjusted EBITDA forecasted to be in the range of 18 million euros and 113 million euros. So basically that's a lot of potential. So far, like Northern Data and Hole Punch really do stand out as clear wins so far. Really helping justify Tether's AI strategy, I would say. So Tether is raising, in other words, raising 20 billion. It sounds expensive, but AI infrastructure is expensive. They are building like data centers, GPU factories that can turn into $1 billion. So also the OpenAI's partnership alone are worth 100 billion plus. And I actually like the strategy of Tether getting into AI because they need to diversify. Like, okay, funds could expand into new stablecoins like Euro or gold back. Okay, but that's still stablecoin business. Like, it makes sense to diversify into energy, into AI, into even Bitcoin mining, stuff like that. Because let's not forget, like diversification is very important, especially we are seeing a pullback in Bitcoin market. Because some people have been quite salty because gold keeps breaking new all-time high. It's like 3,800 an ounce, while Bitcoin has been like sleeping for a month. And people like to, again, especially with traditional mindset, but like the key takeaway from this is that, okay, assets kind of move differently. So it's always a good idea to diversify. Like there's no reason to be, okay, I can only hold one asset. And if I see a person hold another asset that I don't like and need to be against that, like I don't believe that. I think people need to have more balanced mentality. Please just calm down. It's okay. So diversification is key. And even for giant like this Tether, it makes sense to diversify. So think of this race as Tether's building a war chest, not just to defend UST dominance, but to lead the AI crypto convergence. So they're trying to say to the market, they're not just a stablecoin issuer anymore. Like with these new money, like 20 billion flowing in, they want to be the center of AI revolution, like using crypto as the backbone. Like success is of course not guaranteed, and never going guarantee. There are regulators, there are competition, like AI competition is really keen, and maybe the AI hype cycles could derail. But if Tether executes, it could really reshape both industries, like both crypto and also AI. All right, so we are running out of time. I wanted to talk more about Bitcoin mining, but again, we have other show lined up for Roxham TV. So I'm gonna wrap here. Yeah, by the way, just like last call to action, make sure to follow me on Twitter. So jamcrypto_IO, because I give regular updates, whether it's about cold wallet or some cool stuff like Bitcoin ATM machine that I saw yesterday, or like live stream that I did with other channels. So make sure to give me a follow there. I talk about altcoins as well. If you guys are into altcoins, you could, like, the best way to see the latest updates is on my Twitter. All right, so again, also make sure to follow Roxham TV on their Twitter as well. I'm going live right here. Make sure to drop me a like, drop me a comment there. I'll really appreciate your support. Again, so today is Friday. Happy weekend. I'm gonna go and enjoy my dinner with some of my friends and catch up a little bit. There will not be any shows on weekend because it's the weekend. Let's go and have fun. So I will see you guys on Monday, 4 a.m. Eastern time, same time. So thank you so much for watching, and I will see you guys on Monday.